Over the last couple weeks, we have seen the market's focus shift from the banking sector back to incoming economic data and the Fed's quest to tackle inflation. Now, this week brought us a packed slate of economic reports. On Monday, we had ISM's manufacturing, which is a gauge of business activity. On Tuesday, we had the JOLTS report, which provides data on job openings and separations. And then on Wednesday, we had ISM's non-manufacturing, and this is data regarding our servicing sector. Now, all three of these reports showed an economy that is slowing, exactly what the Fed and the bond market want to see, providing solid improvements across mortgage rates to start off the week. Now, while these reports were certainly encouraging, the week's main event was Friday's employment situation report. Now, payroll growth essentially came in at forecast at 236,000 jobs created compared to a forecast of 239. Payroll growth, which is a gauge of wages, came in at forecast at 0.3%. Now, when you break down the technicals, the numbers actually point to a labor market that is tightening considerably. However, the markets didn't view it that way. The bond market and rates, they worsened immediately and unfortunately continue to rise through the market's early 2 o'clock close for Good Friday. Now, in my opinion, rates worsening is due to a combination of factors. Perhaps the markets were hedging on much lower numbers given some of the economic data earlier in the week. Mortgage rates have improved considerably over the last month. Perhaps, because of numbers coming in as expected, they thought it was appropriate to retract a bit. But look, mortgage rates are based on longer-term forecast, and certainly the expectation of the Fed's rate hikes has played in these improvements over the last month. We've seen the Fed futures forecast go from a quarter-point hike to no hike at the next meeting, and then following Friday's jobs report, we saw it go back up to a quarter point. So certainly that adjustment back up added upward pressure to mortgage rates. Now, regardless, it all comes down to inflation. As inflation comes down, so will mortgage rates. And next week brings the next installment of CPI, Consumer Price Index. This is the market's favorite with regards to inflation. It comes out on Wednesday, the 12th. It all comes down to inflation. If you have any questions about these headlines, if you want to talk about mortgage rates, you want to talk about your pre-approval options or how to maximize your purchase power, let's talk. Hey, hope you guys have an amazing Easter. God bless.